Good morning, everybody.
Good
Good.
morning.
How how is the day starting for everyone?
Oh, it hasn't started much yet.
Oh, it's
Nice and
starting.
clear in Illinois.
Awesome.
Storms expected in Connecticut.
Well, we got some storms heading that way out of Nebraska last night, so maybe you'll see it in Illinois today. I don't know. But it's heading that way. Okay,
All right.
Patrick.
Let's keep going.
Patrick's here. Oh my goodness, he's got a different background too.
Yes,
Okay.
I'm in my living room.
Oh, okay. Made a change, huh?
It's cooler in here. It's my orangery is very hot at the moment.
Oh, what's hot in England for you?
85.
Oh, well, that's hot here too. So, okay. Well, let's get rolling here.
All right.
All right. Well, we look a little flat today. We had a bit of a meltdown yesterday in the markets, so it was a good day to have your stops in and sell order limits, and a lot of what I would put on our watch list has gotten stopped out, and I'll go over that in a second. S&P was down at just about a percent, which is pretty big when you consider how big the S&P is now. The Dow Jones was down 1.2%. NASDAQ was down a percent. All 11 sectors were in the red. The tariff talks are kind of back. It's kind of weird because we talked about, a week or two, a couple of weeks ago, tariffs went away. We had the Israeli conflict, with Iran, and we had, the elimination of the nuclear sites, and then we had in the United States the big beautiful bill, and then we had Powell fight with Trump, and then we talked about interest rates, and now the tariffs are back, and that's what the market's worried about. So we continue on with this news-driven uh, market, which is strangely weird. But anyway, that's the market we've inherited here. So let's take a look here. Let me stop this one. Get rid of that. And we'll go over to my little chart here. So it's, if you're swing trading, at least for me, I don't like to have more than 5 positions any time in a swing trade position because it's just a lot of work to maintain it. But when I put these lists together, there's a lot of them, and again, they're just lists and suggestions that maybe you might want to look into if it fits your trading plan. So I just try to come in and figure out how it worked according to my trading plan. And this is just our watch list. And yesterday, really wiped out a lot. They got sold out at, we're out at the seller resistance level. We're out at the intermediate resistance level. Sell limits hit yesterday. Took about everything out, but about 3 stocks: EL, TXT, and CMA. And CMA, Amgen went out. Amgen went out because it hit the 2%. I have a 2% bottom from when I get in if I don't manage it, so it automatically kicks in. But for the most part, you get out and you take your profits and you're happy with that. And then you make sure that you don't run. Okay. So again, I use 2%. These here, because of what happened yesterday on a Monday, I wouldn't even have entered a position. So I didn't even really do anything with these because the market went down, and I don't know how far down it's going to go. And I don't sit here all day because I don't day trade. And I look at it in the morning and then I'll check it maybe at noon or in the afternoon, and that's it. So these I wouldn't even have gotten into on a watch list. We look at our 200, same thing on the under the 200s. Yesterday hit a lot of limits, over here. But again, Whirlpool we got out the other day, 30%. Lumina we got out yesterday, um, 8.75%. Still in Bath and Body Works. I'll show you these charts, up 16%, but 13.9%, 5.8, 18.7. This one we're still in Invesco, 6.5%. A couple of these came out at 2%. So, saved you. This one came down. It hit over here. I kind of calculate where 2% would be and where that would be. and that's where it comes down and hits, and you save on 2%. So again, pretty good, pretty good. You have a system in place that protects your downside and lets the upside run till you hit a resistance. You get out at swing trading. You don't care if the stock's good or bad. You just care if the stock's a winner. And if it's a loser, you get out and put whatever percent you want to get out at. That's up to your risk management plan.
So happy he's explaining this.
Again, these three here, because it was Monday, these are new. I wouldn't have got into these either yesterday just because of the way they opened and went down. So again, we'll watch them to see. But again, I wouldn't have made a position in these. I don't like to really buy on these big down days because I don't know where it's going to stop. On our momentum stocks, they're all out. Okay. Intermediate resistance level came out on just about all of these here. And then you look down. Again, these are the ones that probably wouldn't even enter the position because they were new on the list. And because of market conditions and market went down, I didn't really want to jump into anything. I wouldn't have jumped into anything. And really, I don't do momentum stocks anyway because they just don't give me enough of a return. I got 2%, 8% is the highest, because they're at the top. Okay. So the way I trade with my trading plan, it's a lot of work for a little bit of gain as opposed to coming up here when you do it with more longer term and where I try to hit the bottoms, get a little bit higher return rate with less work. So let's go look at some charts. Get rid of that and bring this one up. I'm a little tired this week. This is our big concert week. I do promotions on concerts and this is our big regional concert. So I've been working that pretty hard lately, along with this. So anyway, here's SPY. Again, SPY has come up, hit resistance. Yesterday, it came back down. We're still above the 9. We're going to open up right about where we closed, at least as of an hour ago when I looked at it. Do have a golden cross, 50 over the 200. Still need to get past this resistance level. We're above the 200. So if you were a Paul Tudor Jones trader, you're still doing pretty well on this one. But we're starting to see, we saw a little bit yesterday with resistance, but after yesterday, again, with these tariffs out there, it's brought in some more uncertainty to the market. DIA has come up, hit resistance, came back down below. Again, kind of looks like the S&P chart. We're going to open up a little bit below. Oscillators are kind of bending over, still in the good area. And again, DIA finally crossed, and got above the 200 in a more monumental way. And again, if you were Paul Tudor Jones, you might have jumped in, and rode this up, but you're not that far above it still. And we'll see where it goes on the Dow and in the Qs. Qs, same thing, up resistance, down, looks just like the others. Market just did that. We're seeing a little bit of a flattening to a little bit of a down on the oscillators, but again, up. Resistance going to open about a little bit above where we closed on the Qs, at least as of an hour ago. Gold. I was thinking gold might have done more yesterday. It's still fighting this resistance level. It's going to open right about lower than it did yesterday. It's, we got the 200, or not the 200, we got the 50, the 20, and the 9 all just punched up right here where we're riding. You got resistance right above it. And the Bollinger Bands are parallel and moving sideways. I mean, we're just in consolidation and we don't know what to do with gold right now. It's just kind of sitting and waiting. I thought it would have been higher yesterday. Silver, I know we talked about silver yesterday. Again, silver is just coming up, popping along resistance, seeing the same kind of Bollingers kind of flattening out here. Oscillators are a little bit negative if you're looking at oscillators. And again, you'd expect this. Did had a pretty good move yesterday just because of the way the market was, off of its support level, but came back up and found resistance. Bitcoin is just, it's in its pattern. It's going from support to resistance and kind of in sideways, rolling right along the 9, 20s here, the 50s here. So a lot of support right below this area where price action is. Still got the Bollingers kind of diverging a little bit. We're still not above the all-time high up here, which is about $112 or 112,000. But again, seeing a little rollover on stochastic, but still sideways movement. But Bollingers are kind of still tilting up on Bitcoin, so it's been pretty resilient over time. You know, you think about the market, but again, we'll watch and see what happens. On the video, again, it's going to look pretty much like we just saw in the S&P and the Qs, because this really drives it. So we've got resistance right here. We've been hitting it for several days. Going to open it just right around that area. Got some sell orders. It does pop up a little bit around 162.77, so not much on the upside. Still got the moving averages moving up. Got a golden cross. Looks just like, I mean, it could be the Qs. I mean, because this is such a big part of the Qs and the S&P market cap wise, you expect these to look the same. So put in the video, Meta, same kind of thing. We did get up, sell order resistance that came back down, and now you've got this 9 that we've seen before. This pattern that comes over, rides along the resistance level, and then that tends to come back down. You're seeing that down here at the MACD, that we're probably going to see that happen. And maybe maybe now is a good time to kind of take a little profit on Meta, the way this chart looks. But again, we're news oriented market, and anything can come out and pop it one way or the other. It's just that way, the world we live in. Microsoft, same kind of thing, up several days right along resistance. Got the 9 coming up on the right on resistance again. Second verse name is the first. Google's playing around resistance, going to open right about at resistance above the 200. Again, got a little bit of a roll on the MACD, just above the 200, but kind of playing with the 200, down below, back up, down below. It hasn't really had a breakout in a substantial manner above the 200. So, kind of wait and see what happens here. If you're going to play it as an investment, I would wait a little bit on that one. Apple's, had a kind of nice run. It came up the Bollinger Band yesterday. It tried to make a run, got beat back in this big wick, came right back down. We're going to open about where we closed on Apple. You're seeing the stochastic kind of roll over a little bit, a little momentum come down, because momentum went down yesterday in the whole market. But usually when you start to see this roll, you'll start to see the MACD roll. But again, it was a nice run. You're still under the 200. You're back inside the Bollinger Band. You can watch this one and maybe get a better price if market turns more positive, down here towards the support. You got a lot of support down here. You got the 9, the 20, and these both crossed over the 50 and the 50 sitting right here. So Apple had a little bit of a run and then, tripped up with the rest of the market yesterday. Amazon. Amazon, where are you? Okay, Amazon's had a nice little run up, again, hitting resistance, still above the 9 at support, but right above, you have resistance at 226.09. Oscillators are still looking fairly good on Amazon, but the run up is limited here a little bit. Oh, and then poor Tesla. If anyone's in Tesla, I think I don't know if this is just shareholder disappointment and in Elon trying to form a third party and yet focusing on Tesla, or I don't know if it's deliveries or what, but drop below the 200 in a pretty meaningful way, right down to the lower Bollinger Band. Look at the 9 and the 20 are dying. They're going to death cross over both the 50 and the 200, and all the oscillators are not looking good either on Tesla. So, it's just until I think people get more confidence in Elon, that he's more focused, I don't see much happening for Tesla, at least chart wise for sure. Palantir, we kind of had this straight, it goes up, hits where the sell orders are. It's been a pretty good level. 1, 2, 3, 4 times we've hit on it, trying to come back up again. You've got resistance here. It's going to open right about there also. Oscillators are still kind of negative, but you do have a little bump on stochastic. We'll see if we can get a little momentum. Got to get past resistance in this sell order in a meaningful way. But you see we have a converging Bollinger Bands also. So again, continue with the sideways pattern on Palantir. Netflix. Same kind of thing. Netflix came up, resistance back down. Now it's running the 9. Again, oscillators are kind of turning down a little bit. So we're seeing a little bit of slowdown, and those tariffs have come back on, kind of slowed down the Mag 7s, and that's what we see in the indexes also. If we go and look at some other that we're looking at under the 200. I showed you the chart. This is one BBWI. Still in this one. We're in back down here. Came up. We wanted to see if it would back test the 200, and on a nice big down day, it did. And it stayed above the 200. I like to go if I'm in something like this. We have a good profit. Always put in a a limit. Sometimes because it's under the 200, I like to go back and see about where, like in a line right here, to put a limit to sell, or maybe a little lower. But how much do I want to make? And I'll put in a sell limit and see if it hits. And it didn't hit on BBWI yesterday, so that's still in, and we're still in IDZ on the watch list. And again, this one did the same thing. I was pretty impressed with Invesco. It held the 200 even yesterday, and we still have the upward trending moving averages. Oscillators still look pretty good. And again, we're in here. So, if you put in a sell, you might want to put it. I always go back and see where, there's a stop, either where it opened or where it closed. And I would put it right in this area. If it came down to save, in case we have another dump, it would save your profit. It just depends on how much, volatility you have in the stock, because some of them can move pretty good. You got big candles on some of these, and some don't move that much. So, but if you put it in, you're probably going to keep your profits. And once you're ahead, there's no reason that you shouldn't take a profit, and at least have a sell limit or some kind of stop. If it stops out and then goes up, you got your profit. You didn't lose. Don't get emotionally attached to your stocks. Get emotionally attached to your profits. Someone we got out finally, ILMN. ILMN, we were in at this point and was riding up. We're starting to roll over in the Bollinger Band. I go back and I look, where would I put, my stop limit? And I just go back where this one stopped and this one started. That's where I put it, came down, bounced down, triggered through that one and got us out with about an 8.75% gain. NCLH, another one that got out. And these were the cruise lines. Again, this one came up and we're seeing if it could get past the 200. And with yesterday's, run, I just got to remember we start here before the open. So I went back. I could have either put it here. I mean, this is our cost base. I could have either put it here or here if I wanted a little. I'm a little more greedy. It came down, tripped it, closed above it, but again, tripped it, gave us a 5.9% gain. So we're out on that one. Macy's, another one. Macy's, we got in down here is our cost basis, had a nice candle up, sideways. And yesterday I'm like, this is a big old candle, and so that's why I wanted to put my stops right there. It did come down, trigger, did close up. But with Macy's, it's a 6% gain from here to here. And that's what we're here for, swing trades. These are not investments. I don't care what Macy's is doing, as a company, and I don't fall in love with Macy's. I'm in and you're out, and then you move on. Macy's today could go up. It's still within its means to go up, and you got stops up here, but 6%, I'll take it on Macy's. And especially on a day like yesterday, I don't know how far down it's going to go. SJM, Smuckers. Got in at this point on the list, came up. Here's another one of those big old candles. Okay, so I look at that, and we went up, and here we started the day. So I said, okay, I'm going to put in again. We're right here. I'm going to go back right on this big top of this candle because that was a big gain for one day. I don't want to lose that gain. Limit here. It did wick down, tapped it, got us out. Could still go up, but I'm looking at these Bollinger Bands coming down. Looking at a little bit of a potential crossover down here. Good time to get out. 4.84%. So don't be afraid to get out. I mean, it kind of wiped out my entire swing trade portfolio. If you look at our watch list, EL, it'll come up for me here. Still in EL. EL, we have a pretty good gain going. here's about where I had it right here, but it didn't come down and trigger. So again, now I'm going to watch, see what happens. And I may put it down a little lower, right above support on the 9, because you can see we've kind of followed the 9 up. Try to see if this will continue to run. The Bollinger Band's still going up. We still have some room to the top side. Just depends on how greedy I am. But I'm looking down here and I'm starting to see some rolls, and basically from yesterday. But you got a gain. We're still up 14%, even at this point. Don't get too greedy. It's not a problem to take some off. You could take half off if you want, or you could take the whole thing off. The other one, we're still in TXT. It didn't get tripped out. Oh no, this one did get tripped out. Sorry. Came down again. I went back and I looked, where I'd want to put, and this one we're not so, we're not up as much on this one. Came down and actually did trip it. TXT was 1.28% on this one. Datadog, I kind of was wondering on this one because it was S&P. Yesterday was a kind of a bad day, but I do have resistance up here and it hit. And that's where I took out on Datadog. When it hits that, I thought, well, maybe it can blow past that, but it certainly didn't. And get out of Datadog. But that was a nice one at 22.7%. I mean, because we had that nice unknown that it joined the S&P, we had no clue that was going to happen. We were just kind of watching it roll up. So that one was part charts and part luck to get that one. So you get those once in a while. BKE, again, this one here came up 9, hit the 9, or not the 9, the resistance level. I get out. We were in at this point. BKE gave us about 5.12%. A couple of them that didn't work. Amgen gave us a little bit of a loss. Here we were where we put it on the list. We thought it was going to play the 200, came down, hit right here. This was a 2%er and just got out. So it just logged me out. That was one of our losses. But if you have more gains than losses, you're going to have losses. That's what you do. I want to look at another one. WHR. This is one we watched for a long time. We played WHR up until it hit the resistance level up here, and that was a really good gain on WHR. And you can see what happened yesterday. We've come back down below the resistance level, and again, you can still go up. You've got some sell orders up here at the top, so we could still see with a positive market. But again, to get past this, I'm okay with getting out with the profit that we got on this one. It was huge on Whirlpool of all things. And then you look for other things. Again, don't fall in love with these stocks and don't get greedy and try to hit the top because it's kind of hard to hit the top or the bottom in this. We're just going we're going for bunts, we're going for singles, and we're going for doubles. BRKB got hit yesterday. Okay, still full candle, not have a full candle under the 200, but again, that hit it pretty hard, and but now we're seeing some of the trending down of the moving averages. Still, we're within it. We came outside of the Bollinger Band. We'll see if we roll back in. Some of the oscillators are moving, so it's going to be interesting if Berkshire goes down below the 200. What logarithms are going to trigger off that? Not just in Berkshire, but what Berkshire owes and other stalwarts that look at Berkshire is like, okay, what's going on? As a main index, Berkshire is, one that the industry looks at. And if it starts closing under the 200 and then keeps continuing down, that's not going to be good for the market in general, I would say. And then UNH, our old, how long can it go sideways? Well, it went sideways again. We're hitting right on support. We've closed under the 9, right on support. The oscillators are not looking good, but still the support remains. You got a Bollinger Band really close, and then you've got sell orders right above that, and then more resistance at the 50. So UNH just continues to sit and go sideways and really not do anything for us. So that's kind of what I got. Trent, a few others. Casey, that did well yesterday. Casey had a nice run up. Okay, yesterday. BKNG. So not everything was down yet. Booking, these are momentum. The momentum kept rolling. This one came sideways, came back over to resistance or support, started moving up again. Again, use your trading plan. Cooper still kind of rolling, kind of came down, hit support right here, and is rolling up. Still rolling on the upper Bollinger Band. These are one of those slow ones I kind of like, but then again, I kind of saw, the stochastic is kind of rolling a little bit, but these are kind of the ones that if we get them and it starts running and the market does right, you just see them kind of roll up. But you're going to have resistance right here about where the 50 is and resistance. So those are just a couple others you can look at if you're interested. my my swing trade portfolio is like sold out a lot yesterday, so I'll keep watching. There wasn't anything really interesting that I wanted to add this week, and so I'll just look. And there's some of those that we didn't get into that were grayed out. I'll keep watching that, but sometimes the market tells you when to get out, and you just wait and you wait for it to come back for you. And that's what I'm going to do. Trent, he's back in Florida, everybody, after 3 weeks, I think.
In 3 weeks, yep. Yeah, come home to a lot of household fun. Uh, let's check out AC and water heater. Fun. The tell sheet 12, we had a couple of changes here. ARM closed yesterday below the trade trend line. That changed a score from it was at a 4 or a 3, excuse me, and changed the allocation from 8 to 4%. And then Micron as well, dropped below the trade trend line, changed the score, reduced the allocation to 4%. We lost about 186 basis points in return between June 16th and yesterday. And let me show you some charts of what I'm seeing there. Here we go. Turn this up. Okay. So a couple things. The VIX continues to trade below the intermediate or the investable into the investable bucket. And that means market makers are long gamma, and that suppresses volatility and puts us in a state of sort of trending higher markets, gripping higher, you could say. Something Patrick pointed out a long time ago, and this is the percentage of stocks above the 20-day, above the 50, and above the 200. And as you can see, above the 200, that's that big one we always talk about, the Paul Tudor Jones factor and all that, is at 51, basically 52% of equities are above the 200. But after yesterday's close, you saw a downturn in both the 20, the 50, and the 200. Now, one day is not a trend. One day is not going to predict the long term. But we want to keep our eyes on that as we enter earnings season. We're going to see, earnings will start to reflect tariffs that were put into place. I think we're getting deeper into the year. We're going to see more earnings reports that really represent what the economy is doing. So take that into account. But overall, there's 71% of the stocks or equities are over the 50 and 68% are over the 20. We love to see the 200 get over probably 60, 70%. That'd be wonderful. That would give us a really strong market overall. But I think we're in a bit of a just sort of a sideways environment to an extent. On the crypto side, sorry, I'm bouncing around here. When I look at crypto, this is Bitcoin. We're in this basically a channel between 102,000 and I don't know, rounded up to about $110,000. We're just trading in this range, and this tells me, this is potentially accumulation period of time. I don't think we're in a let's get rid of our position environment where institutions sell off their positions at the top. I think this is more of accumulation and a looking for a reason to put on more risk kind of environment. When I look at yesterday, were asked about Ethereum. Let me pull that up. We're same thing. We're still in just this channel between 20, just round up to $2,200 and basically $2,700. RSI continues to be above 50. That's positive. But we could start to see possibly more accumulation in Ethereum and a possible, if we could see a break above that, say 2,700, 2,800 range, we could see Ethereum start to make a move higher. Ripple is another heavy market cap weighted position within the crypto world. They are famous or well known for one big SEC fight or lawsuit that was settled, I think, at last year at some point, but it's also been adopted by financial institutions for processing of payments and stuff. American Express, I know early on was an adopter of Ripple. But as you can see, it's going all the way back to December of 24. There's this level of resistance still is the 200 right now. It is trading above the intermediate trend line, but there's nothing really pushing it. And I think that's something to take into account is what, if it's a top five market cap crypto stock, why is it not getting more attention? Why is it not being pushed higher? Could be a question. It's the same with Solana, similar situation. It's above the trade trend line, just sort of follows it recently, but resistance is that intermediate. RSI sits at 50 basically, but it's got a lot of resistance here. And I just go back to where is the risk on element of all this? Where are we going to see risk on come up back into the market overall? And I think you're going to continue to see a lot of companies just hit a resistance level and then move within a channel in a sense. So overall, I think we're coming into earnings season. That is a big deal. That doesn't affect the crypto market in the sense of earnings because they don't have earnings, right? But I think when it comes, we're entering the earnings season, we've got a lot of data that's going to filter into and reflect in these earnings that I believe is, started in fourth quarter of last year, first quarter, and now is really starting to come to the surface in second quarter. Throw in tariffs and all that. So I think this is one of those, it could be a very big surprise quarter, or it could be a very disappointing quarter. It's just sort of neutral. But overall, what I see, what the options market is telling me is it's more positive than negative. And so position well, risk management well. I think this is just, we're in this period of time where risk management really, really comes into play because we're just in this economic data looks negative, global geopolitical stuff looks like a shit show. And now you got corporations are coming out and starting to show the true colors. And so we've got all these three different, push and pulls. And so I believe this is where risk management is really, really going to come into play. And so be careful going into this, but I do see opportunity on an individual side of things. So that's my take. That's my sleeping on 3 hours worth of sleep today. So overall, I'm optimistically, pessimistically neutral. Is that does that cover it?
That's being committed.
Yeah, right.
Yeah. Had someone talk about QVTS. They think they might be ready to run. Chart wise, for me, it's got to get past this resistance, and you got sell orders, you got Bollinger Bands converging. So we'll see. The oscillators, the stochastic shows potential. Hasn't crossed the MACD yet, but we'll see. It's just resistance. If we can get past that, potentially, yeah. I think he wanted IBIT. This is the Bitcoin ETF, and it's just kind of sideways like Bitcoin. Okay, just kind of going along resistance, parallel Bollinger Bands on IBIT. I think he also had Tony CONY. This is a it's a covered call option at a yield max, and it's a monthly dividend. They pay pretty good on their dividends. You just got to watch out for NAV degradation on some of these. I'll take you back here a little bit. See, you got back in here for these dividends, you know, and this is where you bought in. You might be getting dividends and like, yeah, let's see. Here they paid $2.28 a share. Here they paid $1.57. So they're pretty big dividends. There's a dollar going down as the NAV goes in, $1.04, $1.10. But if you got in up at this level, you know, at $25, you know, you've lost your NAV down to $9. Okay, so you need to make that up in dividends, which you can, but you can see, you know, we went from $2 of dividends down to 53 cents of dividends, you know, 73 cents of dividends. So just be careful on that. You know, I do play in these once in a while, and but again, you got to make sure that the dividends cover your loss in your principal, or you know, it's really not worth it at that point. But sometimes when you get down here, you know, they kind of find where they're footing and start moving back up. Another one that is very popular is Misty. And again, you can see here we had a, you know, way up, and if you got in there, you know, the NAV came back down, went back way up, and this follows MicroStrategy, which will follow Bitcoin. But you can see where it comes down. It does hit support down here. And so, you know, the players say, you know, this might be a good place to get in, you know, and then ride it back up. You know, you have a lower cost basis, and then your NAV goes up along with your dividends. Like this one paid $1.23, paid $1.47. These are monthly. $2.37, $1.33, $1.37. So the lower you get, the less it pays. There's 202, there's 227, 308. I mean, and then up here it paid 442. So everyone rushed up to get that dividend, and then you know, the NAV kind of went out. But you know, it's just be careful on those. They are good for dividends, but again, you can lose your principal pretty quick. But right now it's down at an area that doesn't look too bad. They've got these also in actually they'll pay daily or weekly, like ULTY. Let's just go to that one. These are option income strategies. This pays weekly on a dividend. Okay, it's currently at 6.25, 9 cents this week, 9 cents last week, 8 cents the week before, 9.5 cents, 9.5 cents. Okay, so you see, you know, for people that need income, that's interesting. But if you got in back up here, and you know, long term, you have to have a lot of dividends to make up for your principal loss. But seems to have hit the floor here a little bit on something like ULTY. But again, this is a weekly kind of play here for dividends. But again, understand that you could be degrading your NAV and your principal. So anyway, let me see. Somebody needs a link to the Discord. Carl does. Trent, did you see that in the? Yeah, you did. Okay, good. Okay, Patrick, we haven't talked to you for a while. What do you got for us?
Well, as you know, I'm cash rich, and my powder dry, and I'm looking for entry positions for long. And I was looking at Kerry's tell sheet, and I noticed that 7 stocks fulfill the criteria: MACD crossing over the signal line and RSI greater than 50. I identified 7 stocks, 4 of which I confirmed. NVIDIA crossed over on June the 25th, AMD 6th of June the 30th, TSM June the 22nd, and QCOM July 1st to the 2nd. And the other 2 I haven't been able to confirm, ITC, MU, and AVGO. I'm just wondering, I know it's not 100%, it's something like a 65% reliable percentage. What do you think?
Are you talking about the MACD?
I'm talking about the MACD crossing over the signal line,
Yeah.
and the RSI above 50.
Yeah.
As a buy point, a strong buy for those stocks.
Well, you're looking for a for long term, right?
Yeah.
I'm going to turn it over to Trent, and Trent follows those tail stocks long term.
Yeah,
Go ahead,
sure.
Trent.
I think so. I have my system I've created, but I think if you're looking at MACD is a longer term indicator. It's a slower moving oscillator. So it should, in my opinion, it's always when I first started looking at technicals back in the early 90s or late 90s, that was always the first one to go to because it gave you it was a slower moving. It wasn't like a slow stochastic, which is more of a leading, quicker, more sensitive indicator. The MACD, I believe, is more of a for long-term investing. I think is more a positive way to go about. RSI above 50, that's just a line in the sand. That's just a staple. That shows strength when you have a RSI over 50. Where you get toppy is when it's over, I believe, 70, 80 or so. And we see a lot of the tell stocks, the tell sheet 12 stocks have a RSI that are above that sort of 70 mark. And that to me is tad bit cautionary. And that's why I think you're starting to see these stocks sort of pull back towards the trade trend line, as we saw yesterday a little bit. And we'll see how this week goes as we enter earnings season for the year. But I like,
Yep.
From a long-term perspective, I like the MACD, I like the RSI as well. So
Yeah. What about if you align it with stochastics? If you get percentage K greater than percentage D and percentage K greater than 50, if you align that, how does it increase your reliability?
you're starting to throw layers of pie on cake on a pie in a sense. And so
You
for
think it makes it more
me,
complicated?
you're making it more complicated, and here's the thing about this. You can create an enormous amount of confusion by layering a million oscillators, a million moving averages, and a million other things. And I think that's when it comes to long-term investing. That's why the 200 is a staple. For
Yeah.
me, it's the 62
Yeah.
and the 62. When I look at oscillators, I'll look at a MACD because it's a longer term and slower moving oscillator versus, a slow stochastic, which is more of a quick, that to me, that is my 15 period moving average.
What day are you? What chart are you looking at, Patrick? Are you looking at the daily chart?
I'm looking at the weekly chart. Yeah, daily and weekly charts.
Okay, because I agree with Trent on the daily. If I was going to trade, it would just be the 200, for investments. That's it.
Yeah.
That would be it. I mean, there's no better out there, in my opinion, than the 200. And I mean, if you're going to do a long term, on the weekly, I look at the 50-week moving average, basically. But you brought up Micron. I mean, this is a daily chart, okay, of Micron, and Trent can bring it up on, after this on his longer term. But if you would have got, here you would have played at the 200. Let me move it a little further. So you're out, and then you're like, okay, am I in? It hasn't substantially got past it. The 9 came up, and then it started to roll. And then you make your choice. Okay, is this the move? Then you go down, you look at your oscillators. Okay, I only use 3 oscillators. Okay, the MACD, the stochastic, and the RSI. But these are each gauges. One's like a fuel gauge, one's like the temperature gauge, and one's like a tachometer. Okay, and when you're driving your car, you look at them all. You just don't use the speedometer, and you don't ignore the fuel gauge. And then you tie it into the moving averages and the trend. Okay, so here you took off. So let's just say you got in here. You said, I like Micron. I want to be long term. You're in at 102.25, and you're still above the 200. Okay, you're at 119.92. So you're up 17, $18 on this, just on a long-term trade. I'm starting to see it roll. Now, swing trade wise, I'm looking at it differently. I'm looking at smaller on a daily chart. I'm looking at, okay, this is the 9-day moving average. So I'm on a swing trade. I follow that up, crossed here. I look down, you have a cross here, and you're going to see that the MACD, at least how I have mine set up, follows the 9-day moving average. This is why I use the 9. You can see when it crosses the 9, it crosses the signal line. And already the slow stochastic gave us an indicator it was going to go up. And then your RSI is at 69. But look, it's just going straight, all across RSI, coming down a little bit. You come up on a swing trade, and I'm like, okay, I'm out. Here's my resistance level. I'm out. It went up a little higher because I have these other levels that, resistance and support on a swing trade, and it's coming down. If you're a long-term investor, you're still in this, because, you're above the 200. The 200 is actually starting to rise. It just had a crossover of the 50, so that's how I kind of look at it, Patrick. And I'll let Trent pull his up and maybe see something different on his indicators for more long-term.
And so, Patrick, I use this. I was taught basically from a mathematical standpoint of how to look at this. And so when because I have these odd uh, trend lines, the 15, 62, it really breaks, there's a reason behind it. And I've adopted that. But what this, like right here today, this is Micron. Micron closed below the 15 yesterday. And we saw I used it broke below that. And what that tells me is I'm basically, in a sense, front running the 20-day moving average. Because institutionally, a lot of people use the 20 period moving average. Bollinger Bands is based on, has the center of median line is 20. So I'm, in a sense, front running this. So, like, for instance, today, it looks like to open up at 22.01. The 15 is at 22.49. If I see a failure there at close today, that's giving me an indication that this stock is running out of energy. I use that 62, and that is more my quarterly period of time. And it's still below, it's below the 200, but looks to cross. What I want to see, and then I back this up. When I look at the MACD, this is, like I said, a slow moving indicator. And so it broke through the MACD on June 30th and continues to look like it's going to go down, supported by the RSI is declining below 70. So depending on how many layers you want to put into this, when I look at Micron, I look at this and I go, okay, most likely, the way I'm seeing it, $212 or $112 is possible support. Okay, but these other we'll see if that happens. But what I want to see when I look at this, Micron broke down. So we went from an 8% allocation in the tell sheet 12 to 4 last night. It switched that fast because this 15 period moving average is a big deal. It means the market, it breaks through that. If this could easily switch back to tonight, back up to 6 to 8%. It could do that, but what I want to see is that I'm seeing this extended move through the 15, following the 15 since what is that? Since what late April has been really great, but now you're seeing this starting to fail. And what I interpret that is institutions loaded up down here in this area and then started moving it up into from late April higher. And so when I look at entry point into Micron, I look at where is this been resistance that it could be now support. And that's right around $110, $112. And I'll let it just come down to it. And if it supports there and builds a shelf or builds support, then I start dollar cost averaging into it. But
Are we looking at a 5% correction because of all this uncertainty with tariffs, especially with Canada threatening to hit $35 billion worth of U.S. imports?
Patrick, I remember having a conversation with a fund manager years ago when I was a financial advisor at a conference. And I asked him, how did headlines factor into all this? And he said, for us, we're a fundamentally based company, mutual fund manager. So we're looking at fundamentals of the company. We're looking at rate of change between revenue, quarter to quarter, year over year kind of scenarios. we don't really, we take into account fractionally headline news, geopolitical events. But bottom line is we're managing to buy the best fundamentally strong companies. What today, how all these algorithms are working, they're looking at mathematical formulas. They're looking at price, volatility, and volume. And I think that's something to take into account. Whatever Canada decides to do, whatever. If Alberta decides to secede from Canada and become part of the United States, I've been listening to that for 10 years now. I look at this and I go, if I'm an institution, if I'm a Harvard master's grad in finance, and I'm on the trade desk for a Citadel, I'm all about making money. And so I made a lot of money from end of April. I've started to dollar cost average out and reposition, and I'm looking for a place to buy back in at a lower rate. So take into account the mentality of the trading world, of the institutional world, and take into account a lot of this stuff is driven by mathematics these days, algorithms and mathematics. The headlines, that's just a short-term trading opportunity, in my opinion. So long
Patrick,
term, go ahead.
no, go ahead. Sorry.
No, long term, I look at it from a mathematical and more of a where is the institution taking this stock? I look at Berkshire and I go, that's a great question. Why is Berkshire down? And I think it's honestly, it is because it is a value oriented investment company. They look for value. I mean, Coca-Cola, they've just been mining out of Coca-Cola for years, right? Because the dividends.
Kraft Heinz, yeah.
Yeah, I mean, it's a great company. It's about generating income and revenue and looking for value. Totally different from the environment we have been in for the last couple of years, where it's growth, 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 growth. And it's had great growth in the last 2 years and participated in that. But I think, this is just a shuffling. It is a bring Berkshire down to a point where it's a value again for us. I mean,
Yeah.
even didn't Warren say he's not going to buy because it's too overvalued? That's a good indicator.
Yeah. Sorry.
Patrick,
Yeah. Sorry. Sorry.
Patrick, someone asked when you have time if you would go over and list your stocks again that you went over. They didn't get them all.
Yeah. Sure. Okay.
So if you could, that'd be great. Well, Brian he didn't get them all. He was interested in what you were talking about. Which stocks did you just list?
Shall I list?
Yeah, go ahead and list the ones you just did.
Yeah. Yeah. NVIDIA, AMD, INTC, TSM, QCOM, MU, and AVGO. They're the 7.
Thanks, Patrick.
I think
Okay.
Patrick,
Go ahead.
I would encourage you. You're on mute, by the way, bud.
Yeah.
I would encourage you to rely and trust the system that you've built until it doesn't work. And when it comes to buying, because I heard you say on the Kerry's call 2 weeks ago about being heavy cash position, this, that, and the other. I think this is where you have to really trust. Pick how you select companies. Fundamentally, pick how you technically look at them and determine, is this a short-term or intermediate or long-term trade, and trust it, because I think there's some opportunity that is building for you to enter in positions for intermediate to long-term positions and start to dollar cost average into them. But build your system, believe in it, take the noise and put it aside, and look at the companies, look at the technicals, look at the fundamentals, and make a decision. And then build a plan to build into it, because I got a feeling that as we get further into this earnings season, you're going to see some surprises on the positive side, and you're going to see this market start moving higher. And money needs to go somewhere between now and the end of the year so it can show its investors that, hey, we're good at this and we make money so they can keep the money in their funds. So just don't overthink it too much.
Sure. Thanks for the advice.
Yeah.
I got a few charts here people want to look at before we take off for the day. DRS is one, Leonardo DRS. Okay, I don't know what they do. It's got some volume. We're getting some, looks like the MACD's crossing over. We have the stochastic crossing over 63 on the RSI, rolling right along the support at the 9, kind of running the upper Bollinger Band. I like the Bollinger Bands are expanding away from each other. Got the 50 rolling up. So the trends are running up. So again, if this is something you're interested in, I always try to get, a better price. You are getting some opportunities down by support. You can see daily. If you can get a better price, it looks like the trend is up and moving higher. You don't have a defined resistance, but you do have some sell orders at 48.60. So that's a nice one. Dell. Dell again had a nice run. Again, I do not like when this line comes on, this resistance level. It's been pretty strong. It's got to get past this in a meaningful way. You've seen we come up twice to where the sell orders are. So, it's potentially could do that again. And those are at 127.08. You closed at 124.77. So that's pretty much your upside, at least from a chart the last 6 days. But can it break through? Well, something happens, the momentum makes it roll. Yeah, it can happen. But right now, you're kind of at your top. This was, you look at this one, as far as Paul Tudor Jones, this was the same way. It kind of played along the 200 and then took off. So for like Patrick, if I was looking at Dell for an investment and I was just going to use the 200, that would have been a nice shot to get in there at, at 115. And we're sitting at 124 right now. You're up almost $10 just using one line for the most part. And then what was the other one somebody wanted in there? Have to take a look. Hold on a second. Dell, DRS, Marvel. Okay, Marvel. And again, I haven't seen any of these. MRVO. Okay. Marvel had a nice run up, came up, sell order resistance. It's under the 200. It's come back down now below the 9. Right at where resistance was, and you can see support and resistance are together here. What I don't like are the oscillators turning down, meaning we're still seeing the downward trend, kind of a flat 9. Over the last 9 days, we're flattening out and under the 200. I'd kind of wait on this one if you're trading it, and if you're an investor, again, here's the 200 right here. So let's go back out a little bit on Marvell and see how it does against the 200. Yeah, once it gets above, it's had a pretty good history, then down and above, being a pretty good play. And again, so you don't have to always use the 200. I mean, if you see a downward trend like this here, and you feel like, man, I want to take some off, you can. You don't have to wait. You're still going to make some money because you got in back here. Okay, you got in at 69.89, and this is, this one was a dumpster. It would have, got you down here at 85.41, but you still would have made some money. But again, it's still a pretty good run for investing, but it doesn't look like it's going to be able to hit it here anytime soon for an investment. But we'll see how it goes. But not too. I'm not too up on Marvell right now as a trade. Okay, it's 8:30. Anyone else have anything before we move on and Trent goes on to air conditioning repair school?
All right.
Poor guy came home after a couple weeks, his air conditioner's not working.
Gets hot down here and these things struggle. They start to freeze up. So hopefully that's all it is today. So
Yesterday I
it's the hot
bought
water
Uber.
heater that went out. That's a problem. What's that, Paul?
Yesterday I bought Uber. And anytime I think of Uber, I have Dash. I've had it for weeks, a week or two. I don't know. Oh, it's 9. Yeah, 8:30.
Yep, another momentum stock. So, yep, it's
Yeah.
got some momentum rolling.
Oh,
Yeah, and for the TPR, is that tapestry?
Yeah, we're gonna have a little sell order right above it today. It looks like some people might be trying to hop out of that one. So just be aware, right above it, right about the Bollinger Band. So,
Cool, thanks.
yep. Thanks for those, Paul.
all right. We'll wrap it up there. We'll be back here tomorrow. Have a great afternoon or morning, afternoon, and we'll see you tomorrow.
Yeah,
Have a
thanks
great
everyone.
day.
See you guys
Really
tomorrow.
appreciate it.
See you guys.
All right.
Good
Appreciate you
luck
guys.
with your work, Trent.
Yeah,
Thank
Trent.
you.
Eric,
Yeah.
HVAC man.
Right. I mean, if I was going to start a business, that's the business I'd be in here in Florida.
There you go.
HVAC. See y'all later. Take
All right,
care.
guys. See you guys.
Bye.